Hello and welcome to your first Viva Financial Tuition ACCA Business and Technology lesson. My name is James Wright. I'm an ACCA qualified member, and in today's recording I'm going to walk and talk you through the types of organisations and their purpose. The agenda for today's recording is really broken down into 5 key areas of an organisation that you need to be aware of ahead of your examination. First of all, you're actually going to have to define what an organisation actually is. This is then going to nicely lead us into the common features of an organisation, along with defining what are the differences, again, which could be tested in your examination. We'll then get on to, in a bit more detail, the different types of organisations, such as a sole trader compared to a limited company. And finally, you've got to be able to consider and identify different industry sectors, again, that could be tested in your examination in a variety of different scenarios. This now nicely leads us on to actually defining what an organisation actually is. And for your notes today, I'd highly recommend that you actually give yourself a variety of different examples that, again, if you were to be tested on this particular area, you could refer to for the concepts. But we need to consider actually what an organisation is. And the best way to start this off is to actually picture a hierarchy that you can see on the screen there in the diagram, where up at the top it's likely that you're going to have the overall owners and the board of directors. Then filtering down the hierarchy, it will lead on to the management level. And finally, at the bottom, you're going to be having the employees who will be dealing with the customers of the business on a day-to-day, week-by-week basis. In terms of a clear definition for your notes, an organisation is defined as a social arrangement for the controlled performance of collective goals. And that nicely leads us on to a discussion as to why are these organisations actually formed. Well, first of all, you've got to have a picture in your mind about an organisation that you're referring to. And this could be on a scale of, on the left-hand side, a sole trader set-up business where it's just one individual, all the way to the other end of the scale, which you could have multinational blue-chip companies such as Amazon or Apple. And the reason why these organisations are formed is because they're looking to provide value to the marketplace in the form of a product or a service. And from this, the business will operate, as we said, on a day-by-day, week-by-week basis, where hopefully they're going to be actually growing, producing profits, and operating sustainably for the actual founders to gain a return for taking on the risk of starting up and forming the organisation in the first place. Now let's start to look at some of the common features of an organisation that could come up in your examination. And this is where, if you're currently working at the same time as studying for your business and technology examination, I'd highly recommend that you take some of these common features and apply them to your workplace. Because within any organisation, there are going to be different groups of people. Now, I previously used to work in a practice, and we used to have different teams which you would operate in a particular area of clients. And this is where, in any organisation, groups of people could be anything from the group of managers overseeing the employees, or all the way up to the board of directors at the top of the hierarchy. And if we're referring to those board of directors and the overall owners of the business, they're going to be wanting to set goals for short-term and long-term. This could be profitability, it could be sustainability on there, but the goals or the key performance indicators, KPIs, are about where is the business currently at, and strategically, where is the business going in the future. This will also link onto how the business is operating on a day-to-day, week-by-week basis through its systems and procedures that are in place to measure and manage performance. Because an organisation is always wanting to be getting better in what they're doing, and this is where, by measuring to say, look, this is where we were a year ago, these are the changes that we recommended to be put into place, and here is where the business is as at today. In terms of the systems and procedures, an organisation will be looking to actually achieve some marginal gains that could give a competitive advantage in the actual marketplace against competitors who are in the same sector. This nicely leads on to common values and culture of an organisation. Or, in other words, if you were to walk into the door of a new organisation tomorrow, what sort of values and culture would you expect? And how would you be treated by other employees of that organisation? Because these values and culture should be already embedded by the current people who work there and are usually set by the actual owners of the organisation that then filter down from the top of the hierarchy. Finally, that nicely leads us on to code of ethics. And for your notes today, ACCA have a code of ethics that could be applied in your examination. The 5 key areas that could be tested or you need to refer to are, first of all, integrity, secondly, objectivity, thirdly, professional competence and due care, fourthly, professional behaviour, and finally on there, confidentiality, that, for example, you must not be sharing confidential information with friends, family about one of your clients. This then nicely leads us on to part 3 in terms of the differences of organisations. And this is where it's going to be really key that you have a clear picture in your mind about the type of organisation they're testing on the business and technology examination. And in your notes for today, write down a few examples that you could refer to that you are comfortable to think about and apply the concepts to. Because firstly, you have to consider actually what is the primary purpose of the organisation. And that is clearly separated and split out into, is it an organisation that is purely here for profit, or is it a charity on the other hand, which would be defined as a not-for-profit? Other differences are by the actual structure in place. So we could have think about it practically as to a large multinational organisation is going to have a terrifically bigger structure versus a sort of small sole trader, one shop where there are going to be maybe 2 or 3 employees working there. So having that clear structure in your mind could link into questions that you could be tested on how the business operates on a day-to-day basis that could lead to issues. Next is in terms of ownership structure. Is it someone who owns the business 100%, or are there several partners? Also, this could link into, is it a limited company or a sole trader? We'll be coming on to these key terms later on into the recording, but understanding the ownership structure of the business as to the bottom line, who owns it, and who is accountable to stakeholders both internally and externally. And that is where we have to define those key internal and external stakeholders, which classic examples for internal stakeholders are the employees of the business versus the external stakeholders could be the general public or your actual customers. The next key area is by sources of funding and how they can differ between different organisations. And the key term for you to get down is all about the capital structure of the business. This is defined by how much is the business operating in terms of equity and how much is it funded by debt. You could have a business that is 100% equity owned by one individual, or you could be taking on extra funding in the form of loans, and that is where we will be leveraging the use of a loan from a bank, for example, but then that would link into operating the business through different sources of funding, some through equity and some through debt. The next difference in an organisation is about the size. And again, we've referred to it through a few examples as to, is it an organisation set up as a single shop on a high street owned by one individual, or is it a multinational organisation with hundreds of thousands of shareholders such as Apple or Amazon? Next, you have to define in your examination which industry sector the examiner is testing. And you need to be confident in whether it's manufacturing, it could be anything from a bakery on there. It's just so that you can understand to say, right, where does this actual organisation provide value to their customers and how will that implicate on the requirement that I'm being tested on? This nicely gives us an opportunity to give you an example that could be tested on your examination, where one key exam technique is always in your business and technology exam is reading the question carefully. So I'll walk and talk you through if I was actually reading this to myself in the real examination, because the question on here is all about which of the following is not a common feature of organisations. The key word being on there, not. So, is it that they have leaders? Is it that they aim to maximise profit? The next option we're given is they set goals and manage performance. Or finally, they allow employee specialisation on there. So after you've gone through the actual potential answers in your examination, I would then refer back to the requirement again, just to read it to myself so that I fully understand how I need to picture this in my mind. So which of the following is not a common feature of organisations? And the answer, hopefully, that you've selected is that they aim to maximise profit on there. And remember, just have a look back at that requirement again. Which of the following is not a common feature of organisations? But then why is that the case? Well, by aiming to maximise profit, not all organisations are for commercial use in nature. This is where we talked about it previously, that not-for-profit organisations are created for purposes other than making a profit. That relates into their values and purpose of how the actual not-for-profit is structured and the people or the communities that they're helping. So for example, on here, you could have down protecting the natural environment, such as Greenpeace, supporting members of a profession, such as ACCA, or developing international technical and industrial standards, such as the ISO. But in other words, just to come back to that key answer as to they aim to maximise profit, as we talked about on the previous slide, organisations are set up not just to maximise profit, it could be also to provide value to people, the community, and therefore maximising profit is not their main overall aim. The next area that you need to be confident ahead of your examination is all about the different types of organisation. And this is where, for your notes today, you need to break down actually what are the purposes of these different types of organisation and separating them into the different areas that no matter what you got tested on your examination, you could identify the different types of organisation and apply it back to the requirement set. First of all, starting off with a commercial organisation, where the overall aim is to actually maximise the owner's wealth by generating profits and to operate in a wide range of industry sectors. So it could be anything from telecommunications to potentially setting up a law firm. On the flip side of that, we have not-for-profit organisations that we've already discussed. And this could be about helping and supporting benevolent causes. And the goals really vary from maximising the owner's wealth that we've just looked at, because they have different types and scope, from operating as local charities to multinational non-government organisations. In terms of ownership structures now, we have to first of all consider a private sector ownership structure. And this is where the actual organisation is owned and run by private individuals or groups and can be managed by owners or external parties. So, for example, if you were a married couple, you could potentially set up your own business where you could be in 50-50% ownership with your partner, privately run, individual, private sector company on there, where unless you sold shares or you wanted to sell shares to external parties, you would be in complete control and you would have private ownership of that organisation. However, on the other hand, we now have to consider a public sector, or in other simple terms, simply owned and run by the state or the government, and it serves the interest of the public, such as the country's citizens, the city residents, and the actual local community. An example of this in the UK would be HMRC, or in other words, Her Majesty's Revenue and Customs, where businesses within the UK have to pay their taxes, and this is a public sector state-owned organisation. You then have to consider the key stakeholders as to the different types of organisations, along with their purpose and ownership. This is where we have breakdowns such as cooperatives, where you have members, which involve goods or services produced for their benefit, and members own and have democratic control of the organisation. Other key stakeholders can come in the form of other areas, where, as you can see on here, we have commercial, not-for-profit and public sector, identifying the different key stakeholders for the different types of organisation. So as commercial is all about maximising the owner's wealth, identifying the customers and giving them the products or service they truly want at a good value price and to generate profits is going to be obviously a key stakeholder to achieve that goal of the organisation. Whereas a not-for-profit, on the other hand, such as a charity, would be more sort of aimed at the service users, such as maybe it could be operating in terms of helping out a hospice. And finally, a public sector is all about the citizens of the actual country. We now come on to the legal forms of commercial organisations. And for your notes, you need to break these down into clear, separate areas so that you can define each of them and actually talk about the differences between the four potential options that could come up in your examination. First of all, we have a sole trader that you can see on the left-hand side, which is all about being a single owner of an organisation. You have unlimited liability of business debts, which simply means that if you were to run a business that ran up a lot of debts, usually with your local government, that is where, unfortunately, if the business is unable to pay those debts, then to repay those debts, your own personal assets would be sold in order to pay the liability. As a sole trader, you can still hire employees, but usually there are limited opportunities to raise capital because if you're a sole trader, you're usually starting out on a smaller scale. Another alternative option in terms of legal forms of commercial organisations is in the form of a partnership. And as it says, it does what it says on the tin there. For a partnership, you've got to have at least two partners to form a partnership. Generally speaking, they tend to operate with the same unlimited liability as a sole trader, where again, if the partnership was to run up business debts, then the personal assets of the partners involved in the partnership would have to be potentially sold if the business was to run up those debts that needed to be paid. This is where we have limited liability partnership, where each partnership's liability is limited to their contribution, which goes into a bit more detail as to you are a separate entity from the partnership, but that is where, for instance, if I was to join a partnership or a limited liability partnership and I put in £10,000 into this LLP, the maximum that I could lose, my maximum liability, would be the £10,000 potential loss in the LLP if the business was to fail. This nicely leads us on to our third legal form of commercial organisations, which is a limited liability company. You're deemed to be a separate legal entity from the organisation. So unlike a sole trader where you, the individual, are the business, in terms of a limited liability company, the individual is not on paper the business, but would actually work and actually be a director of the business themselves. So the business is a separate entity, and the limited liability company's assets and liabilities are completely separate from the owner. The owner would be classed as a director of the limited liability company and be paid a base salary with potential dividends and bonuses. The owner's liability is limited to their capital contributions, which in a nutshell means that if the owner was to put in £10,000 again to the business, the maximum that the owner could lose is £10,000 if the limited liability company was to fail. Whereas on the other hand, which we talked about in terms of a sole trader, If the limited liability company was to run up a lot of debts that had to be paid, then the owner would not have to pay these debts from their own personal assets. The limited liability company is a separate entity from the individual. And this makes it actually easier to raise capital. Also, when you get to a limited liability company stage, the business is usually a lot bigger than a sole trader, and therefore you have greater access to applying for loans, for example. And finally, if your limited liability company grows continually and you want to potentially list it on a stock exchange, this is where you have to consider a public limited company. Examples of this could be Tesco PLC if you're from the UK, but similar to an LLC, a limited liability company, but the shares are traded on a stock exchange where you'll start trading if it was listed in the UK at 9 a.m. and at the end of the day you would have a closing price, what it could be bought and sold for. This enhances the access to capital, so a public limited company, a PLC, is most likely going to be trading multinationally, and therefore access to capital could be in the form of issuing more shares or taking on more debt in the form of loans. You have greater separation between the ownership and control because we have more shares now that are traded on the stock exchange, and that increases the amount of ownership from a variety of different parties. Finally, we need to consider the industry sectors now. Some industry sectors that have been tested on past papers have included agriculture, forestry or fishing, mining and quarrying, manufacturing, electricity, gas, steam and air conditioning supply, water supply, sewage and waste management, construction, wholesale and retail trade, transportation and storage. Now, as I've just gone through that variety of different industry sectors, what you've got to be thinking there is, what type of products are they selling? Is it a service-based industry? And also in terms of if it is an actual product, such as fishing, for example, this is where fish, if they're to be bought and sold, are a perishable good. However, on the other hand, you've got mining and quarrying, which is a very labour and capital intensive industry sector. Also on the flip side, you've got to consider the time and scale of these actual industries. So construction could take anything from 6 months to 5 years, depending on the actual project. Whereas transportation, such as it could be to do with trains or cars, are operated on a day-to-day basis, which could involve further issues. Other key industry sectors that could come up on your examination, again from a property perspective and service, could be in terms of accommodation and food. And finally, information and communication are newly tested areas on the business and technology examination that you have to be able to consider, like we touched on earlier in the recording, the different systems and procedures that are in place, and identify this to the industry sector about potential issues that may arise. Other industry sectors can involve financial and insurance activities, real estate activities, professional, scientific and technical activities, administrative support services activities, public admin and defence, education, human health and social activities, arts, entertainment and recreation, and other service activities. All in all, it's to give you a flavour as to, in your business and technology exam, a variety of different sectors are going to come up, and you need to picture as to what type of products or services are they actually selling to the market, where is the issue within the actual requirement, and what are they looking for in terms of me providing an answer. So is it actually referring to how does the business actually operate? Is it referring to the board of directors? Is it a structural issue for it? As to the education industry sector is going to be set up differently to a real estate business on there. And lastly, we can consider now what a potential question could look like in your upcoming business and technology examination when it comes to organisations. because you'll typically be tested on something on the lines of, well, what is the difference between a non-governmental organisation, NGO, and a charity? You'll be given 4 options in your examination, typically. First of all, you can see here for option A, an NGO is an international body, a charity can be local. Option B, we have an NGO can make a profit, a charity must donate all profits to its cause. An NGO may accept donations from anyone, a charity only accepts donations from its members. Or finally, option D, there is no difference and they are synonymous. Well, as we said before, talking about exam technique for your business and technology examination, after you've gone through the 4 potential options, refer back to what the requirement was, read it back to yourself. So just say, what is the difference between a non-governmental organisation and a charity? So hopefully you got the answer being option A, an NGO is an international body, a charity can be local. But now we've got to consider actually, why was that the right answer and how did we actually get to it? Well, first of all, we actually should look at some of the other options and say, are those statements actually correct? And option D on there about them being synonymous, well, that isn't the case, first of all. We'll come on to that as to the why you can see on the right-hand side for the paragraphs. But look at option C, that we had a charity only accepts donations from its members. Well, that isn't the case because many global charities put themselves out there to the general public and look for donations to help fund their operations. So C could not be correct on there. And then we come on to options A and B. With B, they're saying a charity must donate all of its profits to its cause. Well, again, that's not correct again, because a charity could actually retain some of its profits to help its actual growth or for future years if they've got a larger project in mind. So in terms of actually reading it through logically, option A on there in terms of a charity can be local is absolutely correct. But coming on to the NGO part of the actual question that was asked, being an international body, in terms of a non-governmental, emphasises that representatives from different countries can be involved in an organisation's operations, but they do not represent the interests of the country's government. So that's where they're interested in the organisation itself, but do not represent the interests of their actual country's government on there. The NGO act independent of the government in setting their goals and objectives when cooperating internationally in terms of with an organisation on there. Thank you very much for listening to your first business and technology lesson, and I look forward to seeing you on the other side for lesson number 2. Thank you.